There's a lot of Canadians up in arms over the new proposed budget, specifically the component on capital gains. And rightfully so, this country is pissing a lot of people off and, in my opinion, heading in the wrong direction. But with that being said, there's some misconception out there with how the new proposed capital gains is going to work in the near future. So in this video, Brandon and I, we're going to break it all down. And by the end of this, it will make sense to you and we're going to give you our honest opinion.
So, welcome back, everyone, to the Canadian Mortgage Guide. Let's dive into what the federal government is proposing with this change in capital gains rates with a quick, brief overview of how capital gains work. It's important to note that this hasn't been passed. It's going to come into effect June 25th if agreed upon. Right now, there is a coalition government with the Liberals and NDP, with the NDP and Jagmeet Singh basically supporting anything Trudeau does. So, strong chance this is happening. So, it's best to prepare for the worst case and then hope for the best case scenario.
So, how capital gains works is you're taxed at 50% of any profit you make on the sale of any asset or investment that you have. So, this can include anything from real estate to stocks, bonds, and one tricky one that you should watch out for is eventually they'll probably be able to tax your crypto investments as well. So, Brandon and I, we're going to dive into a case study on someone that makes 100K of income per year that has a 40% marginal tax rate. So, we're going to dive into a case study specifically on a cottage property purchased 10 years ago and if you were to sell today.
Okay, so let's take our beloved cottage. We all love spending time up there. So, of course, the government's going to come after those. Take a cottage bought in 2014 for 400K. Don't you wish you could do that right now? But now, life's caught up with you. Family doesn't go there as much. You decide we're going to sell it and free up some cash. You're now selling it for 700K for a $300,000 profit. Okay, so take the old rules here. Let's say you're a teacher, you probably earn about $100,000 a year. So you have the $300,000 profit from the family cottage. You would have an average tax rate of 40%. So you would take the first 50% wasn't taxed. The tax would be on that remaining 50% or $150,000 worth of profit. So the total tax that you would pay on that would be $60,000. So you're doing pretty well. You sell for 700,000, you get $300,000 difference, 60,000 on tax, you walk away with $240,000 surplus in your pocket and you got to enjoy the property for 10 years.
So still using the 100K earner, you're going to have that 300K profit from the sale of the cottage. So the first 250K is taxed at that 50% marginal tax rate, which equals that 125. Now you take that 125 and you're taxed at the 40% income tax rate, which equals 50K. Now here's the difference. The second component, which is over 250, so you have the difference of 250 to 300K, which is that 50K. That's now taxed at 66% versus the 50% in the old rules. Now that's going to equal 33K, which then we're still taxing that at your income tax rate of 40%, which then equals 13,200. So now we're going to add the initial 50K to that 13,200, which gives you a grand total of $63,200 based off of that 300K capital gains.
For sure. So it's not a huge jump from 60K to 63,200. But the difference here is you're a 100K earner and you're now paying 3,200 more tax. That's 3.2 in additional tax. So why do they need this? For more haircuts for Trudeau or handouts for other Canadians who don't own assets and they're trying to buy their votes? Who this really impacts is going to be corporations. Corporations from day one are getting taxed this new percentage. They don't get this 250K buffer. And you have to realize when you say corporations, and liberals love to do this, they like to bake an image of this really big business. But there's a lot of small business owners like Tom and myself, like your mom and pop shop down the street, your ice cream store up at that beloved cottage that have corporations set up. And they've suffered through the years of the pandemic. They've suffered from other government policies. They now have employees who feel entitled and don't want to work as hard as they used to. And now they're getting this extra layer of punishment. And it's just icing on the shit sandwich from the government.
Yeah, man. And you know what? There's a lot of doctors in this country that are pissed off, and rightfully so. Like, we are pissed off ourselves because we have our business in our own corporations, and most doctors do as well. So from day one, they're taxed at 66%. They don't have that leeway that personal individuals do. So I would much rather not piss off doctors in this country because the wait times for family doctors are just insane, and you don't want to diminish the amount of doctors we have in this country to flee to another country. So I really don't like what they're doing here. I think you're about the same, Brandon, with your thoughts.
For sure, you hit the nail on the head there. If I'm a doctor and I have a really desired skill set, why bother staying here with higher taxes? I can go to a different country. I can go to the Middle East. I could go to the States. I could go to Europe. Mind you, Europe's taxes are pretty shit too. But you can go to another place, earn an insane amount of more money, get treated better by the government and by people, have a better balance, probably live in a better climate, and really have an overall better quality of life instead of staying here and being treated like shit because you earn a good living. Realistically, you've worked hard to earn that living. And this whole idea that everything that people earn has to get fed to the bottom feeders, I'm just personally sick of it.
Yeah, same here. And you know what? They missed the mark on this entirely. They had a chance to really improve things. And a lot of what they're trying to do just goes against what you want to do to build up a country and really have it thrive.
Exactly. So while you might see your favorite family doctor leave, you can't blame them. Tom and I are not leaving. We're sticking around. We're going to see things through and hope for change in this country. And in the meantime, the Canadian Mortgage Guide is going to cover these changes and keep you informed so that you can best plan for your future in Canada.